Hey everybody, welcome to the weekly market wrap-up. My name is Gareth Soloway, and we had quite a day on Wall Street today, and in fact, in crypto as well, a big day here today. So we saw the stock market collapsing down about 2 to 3%, Bitcoin falling sharply as well. A lot of this on the back of PCE data. Now, the PCE data, the headline numbers came in approximately as expectations were thought. However, the core was slightly hotter. In addition, this is the kicker, none of the tariffs that have been imposed yet are reflected in these numbers. That scares the market. In addition, the uncertainty of, are these tariffs going to be put in on April 2nd or are they going to be delayed again? All of these factors contributing to uncertainty. Throw in consumer confidence, consumer spending, you name it. The markets are a mess right now. So let's go over to the big board. Follow me over here, folks, and let's take a look at what we have today. You can see the Dow Jones Industrial Average down 750 points on the day. The NASDAQ down over 500 or about 3%, and the S&P 500 down 114 points or 2%. Nasty, nasty drop. Oil down slightly on the day. Gold is rallying again, safe haven asset. People continue to move into that. And Bitcoin down about 4%, down $3,400 on the day. Now, looking at the heat map, you can see how nasty it is, especially in the technology sectors, right? You have Microsoft, Google, Nvidia, Apple, all of these down, and look at all the red. The smaller boxes mean smaller companies. If you look over here, there's a little bit of patch of green. Look at right here, utilities and energy and banking, a few small greens there, but utilities, which are safe haven assets, generally, that's where money goes when the markets or investors are scared. That is pulling in money. Now, if we flip over to the daily chart, this is been something I've gone over with you guys in the game plans, in trading the closes, all of these, right? We had the bounce here up on the S&P 500. Basically, it took about 9 days to bounce up. In 3 trading days, we've reversed almost all of those gains. That shows relative weakness. Remember that. Again, when it takes multiple days up and only a day or two down, it shows you how weak the markets are. Now, the first level we're watching right here is very clear, right? We have this parallel. This is something we've gone over before. This area here, this is perfectly parallel with these two top points. So once we get down here, maybe on Monday or Tuesday of next week, let's see how it reacts. On the SPY, this is right around 550. If this breaks, you have a couple stopping points. One would be down here, but really your August lows of 2024, that's what I'm isolating down as my next major level on the S&P 500. All right, let's walk back to the computer here and take a look at a few other charts. Okay, so first off, let's take a look at the QQQ. I think this is a beautiful chart. So let's go to my charts here. If we can, flip over to the screen here and take a look. There we go. You can see this trend line right here, right? So again, pivot low, pivot low, pivot low. We broke down, and again, look at the retrace and how many days it took. Look at all these days of chop that headed up, and in 3 days, we wiped that all out. We came down, we filled a little gap, but we're now into technical support. Not big support, though, all right? One of the key metrics of technical analysis is that when you have levels that are hit very soon after each other, the level is much weaker as support versus something that goes back a lot further. Like, for instance, here to here, right? Again, long distance or these highs as resistant points, those are going to be firmer because they go back a lot longer. The Russell 2000, another bashing to that, down over 2% today. But take a look. We're coming back into this level. I have us projected out to go on the Russell. Take a look at this long-term trend line going back to March 2020, the COVID lows to this low. Eventually, I think there's a little stopping point here around 191 on the IWM, but eventually 187 is where I start nibbling on this stuff, all right? Now, we're going to talk about some trading opportunities here, and this is the beauty of it. So if we come back to me on the screen here, I want to just be clear on this. Markets in panic mode mean opportunity to swing traders. All right, this is the beauty of the market, right? When it's just grinding up little by little, it's great for long-term investors. For swing traders, not so good. When we get volatility and big drops and panic sets in, we can buy those dips into technical levels and make quick 10, 20% moves in just days. All right, let's take a look at this. This is one of my favorite trades into next week. So if we go back to the screen here, you can see right here is Broadcom. This is AVGO, trillion-dollar company, semiconductors. This, again, was trading at $250. It has come all the way in to these two trend lines converging. So, again, look at the trend line right here. right up here, and this downsloping one. In addition, if we take our Fibonacci tool, and I went over this morning in the game plan, we drag our fib down, and I apologize, that's not the fib I want to show. Here we go. We go back to our lows right here, so the beginning of the bull run, to our all-time highs, and look at that fib level. The 50% fib retrace is right at that cross section right there. And so listen, does it guarantee us a bounce? Heck no. Nothing's guaranteed in this game, but does it raise the probability that AVGO could be due for a $10, $20 bounce here? Heck yeah. I would look for a move back to about 178 to 179 here, maybe even back to 187 from the current 169 close today. Nvidia, this, again, is a great chart. In fact, let's go over to the big board and just take a look at this here. So if we flip over here, folks, and we look at what we have going on, this is a great example of a break of support and a retrace to the scene of the crime and what can happen when we hit that. So we have our lows here, right? So all of these lows, you can see, again, hops, kind of almost kisses, comes up here, hits, bounces, and then breaks. And that break right there, look at how that break takes hold, it confirms, it retraces, and then what happens? Price is rejected. So remember, former support, so it was support here, 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 and over here. Once support breaks and confirms, this now becomes resistance, and it tends to reject price to the downside. And these are just simple rules that we can all learn from that will guide us to which position to be in. So instead of thinking, oh, Nvidia is going back to the all-time highs here, at this point, you need to see that trend line and say, wait a minute, this actually could be a sell signal to the downside, and that is what it was. And Nvidia now has fallen pretty sharply this week alone. All right, let's walk back to the computer here and take a gander. Lululemon got hammered today. I think the big thing on Lulu that I want to touch on is that Lululemon is a high-end consumer product, right? It takes a lot of, or higher income earners are what are usually buying these products. And when you see a drop like this on Lulu, right? This is telling us the high-end consumer is now struggling. And so again, it starts out with the low end. Those are the ones that feel the kind of the lower to the middle income. They feel the pressure of a poorer economy first. And then once it trickles up to the high end, which by the way coincides with the stock market not making new weekly all-time highs, it's again the reverse wealth effect. Now you start seeing the higher end consumer starting to pull back. Now Lulu again down as much as 14% on the day. Where is this going to bottom out? Let's take a look at the chart. And if we go to the chart, I'm first going to be eyeing this level. We went over this morning, this area, and then double bottom. Remember, these are only swing trades. If we're going into a recession like I think, then these stocks are all going to go a lot lower. Another big fan, this is a big one for me that I'm watching to be a buyer of for just a swing trade, is Alphabet. Alphabet, look at this drop on Alphabet from over $200, $207. Look at the drop today. But look, gap fill, double bottom, coming right into that level. That should be a bounce level, and I will be looking to pick this up with members of Smart Money Stocks and ETFs next week, probably at a break of 150. All right, again, now think about the drop on that thing. If we go to a measure tool and we look at this high end, so far it is down 26%. If it gets down into my range, you're going to be down about 27.5%. For me, that would be a play for about a 10% bounce, and again, an easy swing trade potentially there as well. All right. Bitcoin. Let's go over to the big board to test out Bitcoin here. Follow me over here. We have Bitcoin, right? Now, number one, I've been telling you for a long, long time that Bitcoin was in between resistance, right? Bear with me as I get my drawing tool up here. Okay, so we have resistance right here, right? And we even pierced it here and got rejected, touched it here, got rejected. And we saw then that if you look at this, it was starting to connect and we had these lows. Okay, and it was coming to the head of the wedge pattern right in here. Well, lo and behold, we know which direction it's going. Big drop on Bitcoin. And one of the things I was talking to members about today in the crypto video that I did for just members Smart Money Crypto is that in general, it's very rare. We have our support line down here. You almost never see a scenario where you don't at least touch support. What does that mean? It means that at some point this has to come down and touch support, right? What's the level of support? 74. I've talked about this before. 74 to 72,000. 72,000. So again, in general, when you're hovering between support and resistance, it's almost unheard of to never touch the support. It tells you that the odds favor us moving into support, and that tells us in general this is probably the beginning of the move, where again, at some point we're headed down here to at least 74,000. So keep an eye out for that. Notice again, the stock market got crushed today. Bitcoin taking a beating too. There's a risk factor here, risk on, risk off. In this case, risk off with Bitcoin. Now, on the other side of that, we have gold, right? Gold is the opposite. Gold, again, is the safe haven, and sure enough, it was up again today. So if we take a look at the chart here, you can see, again, the chart right up into this trend line, and this is a great parallel. Look at the parallel. Now, again, I've been expecting a pullback on gold since right here. We got a 3-day and then a push up. I still think gold is going to pull back, and it might not be with the popular crowd, but then again, that usually means I'm right. I expect a pullback here. It's not a big pullback. I still think it's a bigger uptrend in gold, but I do expect further a downside on gold and a rejection of this level. Silver today, a little bit of downside movement, really nothing new to report here. And then if we flip over to oil, you guys know I've been talking about this bearish pattern. We should start to see this come down here and test this major support down in this lower range around $66 to $65 a barrel. We might be starting to see that, but you can see the bear flag forming. We know what that means. Probability down move, bear flag. It means eventually we roll over. Lastly, natural gas had a little bit of a bounce today. Oftentimes, nat gas actually works as kind of an inverse with the markets, place for people to hide. Notice nat gas topping tail here, came down, bear flagged, broke down, tagged pivot low, and there's your bounce. Now, how I'm going to play this is I'm going to look for it to come back to this line. And if it gets back to this line here, that's going to be where you look to short it for a pullback, the next leg lower that I think takes us down to about 340 on natural gas. All right, so let's summarize here, right? We have a market that is in turmoil. What do I mean by turmoil? Tariffs, uncertainty, inflation, economy. These are the factors, and people don't really have a good grasp. Remember, these tariffs that are supposed to go in on April 2nd, they've been delayed prior. So are they going to go in? Are they going to be delayed? The auto tariffs got put into place, but again, what about these ones on April 2nd? And so this uncertainty is making it very hard for big money to allocate significant capital into the market, and they're just staying out, which then creates this kind of fear trade of, well, if the institutions aren't involved, what is going on? And the sellers, obviously, you have certain hedge funds selling, but then also retail starting to panic to the downside. But with selling, we know opportunity comes. With panic, opportunity. Broadcom, also Google/Alphabet, those are two that I'm watching into next week. Let's get this market under our wing. Let's rock it. Let's make some money together, folks. I'll keep you posted. I'll be back on Monday, guys, 9 a.m. for the game plan. I'll give you guys all my trades for Monday. We'll rock and roll together. You guys have a good one. Take care.